Good evening. This is Manesh Patel from Ichimokutrade.com. Today's webinar we're going to go through is basically learn how to use the Ichimokutrade website, which would be pretty much called a research center. Before we begin, I want to go for a normal disclaimer, which is our normal procedure that we do for all our webinars. Let's our normal disclaimer to state this is for education use only. We're not soliciting you to buy or sell any particular instrument. If you decide to take a trade based on our presentation, you're doing that at your own risk. All the charts today that we're going to look through are going to be pretty much from TradeStation, which is one of the brokerage platforms that we support. Okay. The agenda for this webinar is basically right here. I know we've got some questions on Ichimoku. What we're going to do is this webinar is going to be focused mainly towards going to the website and all the tools that are available. So pretty much Ichimoku based and non-Ichimoku based, which I'll go through in just a moment. So you'll have all that information there. As far as Ichimoku related questions, we could do a couple of things. If there's a whole bunch of them, we could set up a Ichimoku webinar specifically a little later on, maybe this week or next week. Or I could sit there and personally answer all your questions individually from what you type in here. And that way you have some one-on-one engagement conversation. Okay. As I mentioned in a minute ago, I think someone says the voice is too low. Let me adjust my microphone. Can you hear me now? Shoot, come on. Avi? Okay. Okay, so actually, let me turn off my Skype. Okay, so these are pretty much what we're going to go through here for the agenda for tonight. First, we're going to kind of go for the website layout. The reason why is that we've been going for some changes on the website. There's a lot of tools available there. A lot of people don't know about them. So we're going to go through each of those tools and show you exactly how you could use them. We're going to be addressing the needs for all the day traders, the swing traders, the long-term traders. Also, we're going to be talking about breakouts and pullbacks for each of these tools too. Okay, so we're going to go for the layout, show you kind of where everything's at, what useful things to look for, and so forth. So the website layout is not confusing at all for you. Number two, we're going to actually go for the number system. One of the things a lot of people are very confused about is our number system that we have, which is 1 through 5. So what I'm going to do is I'm going to go for that number system in great detail, talk about it in regards to a regular chart, and then also illustrate it with Ichimoku too. So some people on this call know about Ichimoku. Some people have no experience. So it really doesn't matter if you do have experience with Ichimoku or not, as long as you have some type of technical or background experience reading charts. We'll go through and relate the number system to that so you can see exactly what each number means and what number you'll be looking for your trading plan and opportunities that you like to trade. Okay. After we go through that, we're going to go through a lot more detail of the heat map, which is pretty much our live signal tool that we have. Then we have our scanner, which is brand new, and a lot of people like that too. The scanner basically goes through all the instruments in the as far as U.S. is concerned. So it goes for U.S. stocks, it goes for options, it goes for currencies and futures. Later on, we may roll this out to all the global markets, but right now it's mainly U.S.-centric, whereas the heat map is more global. Then we'll talk about the multiple time frame email alerts, which a lot of people do get confused on, but we're going to sit there and demystify those email alerts and show you the uniqueness behind all those. And then lastly, we'll wrap up the webinar by showing you where all the tutorials are, where you can get more granular details on each of the subjects that we're talking about. So we'll go from there. Okay. I do see all the questions you guys are asking, so type away as much as you want, and then what we'll do is we'll address them on this webinar. If they're specifically related to Ichimoku, as I mentioned, we'll talk about them towards the end if we have time, or what we'll do is we'll set up another webinar or we'll personally answer those questions. Okay? Now, before we begin, I just want a couple of things to note. We've been around for a couple of years now. The website's been going through changes. The reason why is we've been adding more and more tools as time progresses. So we're still at the infancy, in my mind, as far as the website and its tool set, because we are sitting there evolving the website to a fully blown tool set that's going to be available for any worldwide market and also available for any type of trader that's out there. And I'll talk more about that as we go for each individual product and kind of show you the transformation that we've gone from since 2 years ago that we launched the website to now. Okay. First thing to note, this is a trader's website. It's not a marketing website at all. Okay. I understand people have started to complain about spelling errors and this and that. Understand one thing. This website was created specifically for traders to help find opportunities. Okay, so filter through all the global markets and find the opportunities. Okay, this is a website that me, and everyone in our company, along with all our students worldwide, use this website to find these opportunities and to sit there and put trades on. Okay, so this is a website that we use every day, every minute of the day, to pretty much find trading opportunities and put trades on. Okay, and it's not just me; it's pretty much everyone in our company, along with our students and so forth. Okay, so forgive me if you find a spelling mistake, or if this is not proper, this and blah 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 blah. But remember, we're worried more about content than the front end GUI and how it looks and color coding and all this stuff. Okay, so we're not looking at it as a marketing engine at all. We're looking at it pretty much as a trading tool. Okay, so hopefully you guys will understand that and kind of look past some of the kind of the minor graphical things that you see in the front end. If you guys do have some feedback for us, we're more than welcome to take them, and then we'll have a web program to go through it and modify it to kind of make it easier to understand and so forth as we move forward. Number 2, believe it or not, the signals behind the website are, we actually have institutional black boxes behind the website. So the website is just a GUI front end that's basically displaying information. Believe it or not, we actually have a lot of black boxes in the cloud that's running full-time, real-time on all the global markets out there that are pretty much running out there. These are institutional black boxes that pretty much sit there and monitor all time frames and all instruments out there. Okay, so this is not something where we got one little computer that's running in the background. We actually have a couple of machines that are running with various data sources out there for backup and redundancy, and these are institutional black boxes out there that are generating the signals that you see on the website. All the website is doing is taking these signals and displaying them in a certain format for ease of use for the trader to understand and to use. Okay, and we'll talk more about these signals and what they mean and how that you could use them. Next, these tools that we're going to talk about are pretty much tools for all the types of traders out there. Half the journey on becoming a successful, consistent trader is to figure out what type of trader you are. Some people are breakout traders. A lot of people are pullback traders. Some people are day traders where they love trading tick charts, 5-minute charts, 10-minute charts, 30-minute charts, and so forth. Some people are swing traders where they like to keep a trade for about a week or so. So they're trading more like a 60-minute chart, 120, 240. And then you have the long-term traders, which are pretty much daily, weekly, and monthly. We're going to address every type of trader and what type of entry and exits and so forth in this website. So we'll go through, when we go through each individual tool, I'll specify everything out there for each individual trader type. Okay? We've got a lot of people worldwide on this call. And we got a lot of different personalities too. So I want to make sure we do address everything with everyone as we go forward. Okay. Next, we support various markets. We are not just a U.S.-based company. We are a global company. So we support not only just U.S. products like U.S. stock market futures and so forth. We also support the global forex market. We also support Canada stocks, UK stocks, Malaysia, Singapore, Australia, and China, and so forth. If there's a particular market of interest for you, you could let us know, and we could look at adding that. There's got to be a couple of people demanding that particular country market. If so, we'll sit there and support that. Oh, one of the things I forgot to mention, we do support Europe, so we do support German and Switzerland market too now. That was due to huge demand for those particular markets. So we do have the ability to pretty much support any global market, any stock market around the world, along with futures and so forth. Okay, it's just a matter of turning it on with a little switch or expanding our servers to handle the data feeds that are coming in real time. Next, where's a lot of information we're going to go through on this webinar. You do have the liberty to sign up for a free 30-minute one-on-one session, which will go through the website with your particular style and needs and so forth. So we can set you up with one of our mentors after this call tomorrow. You could talk to someone or send us an email, and I'll give you the phone numbers and so forth, where you can set up a free 30-minute private one-on-one session with someone where they can go through your individual requirements. Okay, so that is available for everyone out there, and I will give you the contact information a little later where you can sit there and call us. Next, a lot of people are complaining about the price. Believe it or not, this price is very, very low compared to most institutional signals out there. Remember, this is not a retail product, but an institutional product. The way we priced out everything is the price of a subscription, the monthly subscription, is pretty much half the profits that you of a one trade off a 120-minute time frame. So we'll go through the pricing and all that that's available. I'll show you how you could sit there and get a cheaper price too. If you sign up for a yearly subscription, and we'll go through all the different pricing and all the options we have, along with the subscription options that are available. Okay. Next, we are continuously enhancing our tools every day. As I mentioned, I still believe we're at the infancy on the website. There's a lot of information there, but it is getting better and better and better. So please continuously look at the emails that we send out and webinars, because these websites will continuously keep on changing. We'll keep on enhancing products and start adding new products. One of the latest couple of products that we added, which we're going to go through this week, today, is going to be options. So there's a lot of option tools that we added. Also, we added a lot of information and content now in the scanners, where you even have the ability to sit there and set up scans and to have daily reports sent to you by 6 a.m. Eastern Standard Time. So you will the website will automatically scan everything and send out a report to you every morning at 6 a.m. Eastern Standard Time. Okay, and that's for pretty much currencies, U.S. stocks, and futures. Okay. Someone's asking, is there a sales pitch here? No, this webinar, I mean, if you guys have heard me speak in live events out there, I don't go for a sales pitch at all. I'm a technical trader out there. There's not a sales pitch at all. I'm basically going through this webinar is to go through all the tools that are available out there and how you could use them as a trader, whether you use Ichimoku or not use Ichimoku. Okay. As I mentioned, this is not an Ichimoku webinar, but we can set up an Ichimoku webinar a little later where we can go through that. Or I'll also point you to some webinars, some actually live workshops that we recorded that actually go for Ichimoku and various things out there. Okay? I know there's questions about Ichimoku versus Elliott, right? So we could address that too a little later. Now, the very first thing I like to kind of take care of is our numbering system. Okay? And the reason why I want to take that, this is the number one reason why people get confused when they come to our website. They do not understand the numbering system. It is a little complicated, but once you understand it, it's the most useful tool out there. Okay? And believe it or not, we've thought of for the last 2 years how to dumb this down and simplify it. But believe it or not, this is as simple as we could get it to go without sitting there really, really complicating things even more. Okay? So what I like to do is I like to talk about two types of trades. One is counter trend, and the other one's going to be trend. Remember, for people that don't know what counter trend is basically where you have price going in one continuous direction, whether it be going up or down, and then all of a sudden, instead of you sitting there trying to trade that particular direction where price is going, you're trying to predict where price is going to stop and reverse. So you're going to trade against the trend. Okay? So when you're trading against the trend, we basically have two rating numbers, which are 1 and 2, that basically are counter trend type of trades. Okay? So the rating, so if you ever see a number system number 1, a rating equals 1. This basically means it breaks the first support resistance and indicates a possible pullback may occur. So if you're a bottom picker, where you like to see things reverse after a big long trend, this is the very first thing you're going to look for is a rating number 1. And don't worry, I'm going to show you a little graphical view in just a moment if these words sound confusing. But basically, rating number 1 is basically the first sign that it's about to reverse and enter a major pullback. Okay? And the goals of the counter trend trader is basically playing within a consolidation zone between support resistances, or what you're doing is you're playing a major pullback for something that's already trended. Okay? Next, number 2. Rating 2, all it is rating 1, but what we're looking for is after you break the support resistance, we're looking for the first major pullback. Okay? Some traders, what they like to do is as soon as you break a support resistance, they like to enter right away. That's what the rating number 1 is. Rating number 2 is basically for the people that like to wait for a pullback after you break the support resistance. So that's what rating number 2 is. Okay? Any questions in regards to 1 or 2? If you're an Ichimoku trader, number 1 is basically where it breaks the Kijinsen. Number 2 is where it breaks the Kijinsen, and the first pullback that starts to occur is number 2. So basically 1 and 2 are the Kijinsen cross strategy that's basically outlined in the ebook. If you've not seen the ebook, we'll show you exactly where that's at. It's a free ebook on all the Ichimoku strategies. But you really don't need to know that. I'm going to show you a visual image of that in just a moment. Is everyone okay with that? Okay. Now, rating 2, some people say number 2 is a pullback. This is what we also call confirmation. Okay. So when you're waiting for a pullback, another word for that a lot of traders use is a confirmation. Okay. So that basically describes the counter trend. Okay. Remember, in counter trend, you're playing between a support resistance. Your profits are limited. Okay. Because you're playing a major pullback in a trend reversal. Okay. Or where you're playing between a consolidation pattern. Yes, Bob, there was a question that says that's price breaking the Kijinsen. Right, yes. Number 1 is basically where it broke the Kijinsen and closed above it or below it, depending if you're bullish or bearish. Number 2 is basically the Kijinsen cross, but after that, it looks for a pullback. Number 2 confirms the pullback is underway. Okay? Aggressive traders are basically going to go and start looking for the rating number 1 because they're playing the upward movement or downward movement without a pullback. Number 2 is more towards the conservative type of traders where they need a confirmation before they enter. They don't want to get caught up in all these games that are being played around the support resistance. Okay? Now what we're going to do is we're going to discuss the trend strategy. If you're a beginning trader, this is pretty much where you're going to live and what you're going to look for. Okay? It doesn't matter what time frame, but these are numbers that you're going to look for. So number 3 is basically looking for price to break a major. Okay? This is not a regular support resistance, but a major support resistance level. Okay? And this indicates a possible trend is about to occur. Okay? So this is the first sign of an institutional trend starting to occur. Okay? This is what you're going to look for. If you're a beginning trader, okay, this is what you need to sit there and start looking for are 3s and what we're going to call 4s in a moment. Okay? You don't need to be a counter trend trader when you start beginning trading. Okay? And number 4 is basically number 3, but now with a pullback confirmation. Okay? So hopefully that's clear here. Okay? So again, number 3 is basically where it breaks a major support resistance. If you're an Ichimoku trader, that's going to be the cloud. So this is when it first breaks the cloud is the number 3, and then when the pullback starts to occur, that's when it becomes a 4. Okay? Everyone okay with that? Now, if you're looking for a strategy that has a huge high reward risk ratio, okay, and has the ability to sit there and give you a low risk, what you want to do is look for rating number 4. Believe it or not, my students and I still look for rating number 4s because that's the best reward-risk strategy that you're going to find out there, is that deals with specifically institutional types of ways. Okay? Any questions? Okay, and don't worry, Bob, I'm about to show you a chart. Okay? Because just like everyone else, I'm not sure about you guys, but when I look at words, I kind of get confused. I'm more of a person that's a visual. So here comes the visual. Okay? Oh, I forgot the last rating. Rating number 5 is basically where the instrument is already trending. If you're trying to enter a rating number 5, that basically means you understand that it's already trending and you're trying to play between the support resistance. Okay? So let's go to a visual picture. So this black line here represents basically a trend going up. This is a bullish trend going up. Is everyone okay with that? Okay? That's a bullish trend there. If you guys haven't heard the terminology, that's a bullish trend where its price continuously going up. Next, what you've done is you've outlined 2 supports. This first dashed red line right here is a minor support. Okay? And then this one right here is basically a major support down here. Okay, if you're a Fibonacci trader, this is pretty much a 50% pullback or 61.8. Okay, if you're Ichimoku, I'm going to show you what that is in just a moment. Okay, so what you're looking for is basically here. So when you first have a pullback here, what you're looking for is price to get to this first major support. When it breaks it and closes below it, that's when the signal becomes a 1. Everyone okay with that? Okay? Now that 1, it will stay a 1 until the pullback starts to occur. When the pullback starts to occur, it will stay at number 2. Is everyone okay with that? Okay? If anyone's confused, please stop me right now because it's about to get a little more complicated in a minute. So remember, the moment you break the support here, okay, this is basically a number 1. It will remain a number 1 until a pullback starts to occur. The moment a pullback starts to occur, it'll go to a 2 and it'll remain a 2 until 2 conditions occur. Everyone okay? Okay? Now, this here will remain a 2. In some cases, price can stop here and then continue to go down. Okay? Sometimes it's going to come back here to that support that you broke and turn into resistance. Sometimes it could pull all the way up here. Sometimes it could pull up here. It could be different scenarios. Okay? In this example, we're showing you it pulls back up to that old support that you broke, turns into resistance, and then starts to go down. Everyone okay with this? Okay? Now, the key thing is that when this pullback started occurring, it will remain a 2. We actually have a black box in the background that's running, and what it's going to do is it will remain a 2 until it gets above this red line by X number of points to say that this is no longer a downward movement, it's about to go back up, and at that point it's no longer a valid 2 signal to go down, or until the breakout level here basically is triggered. Okay? So in the background, we actually have an automated strategy that's running that basically say when a number 2 occurs, what we're going to do is we're going to enter the trade. We're going to stay in that trade until a breakout occurs or until it gets stopped out. Everyone okay with that? So the only time the 2 will disappear is that if it breaks this resistance and goes back above it by X number of points, the 2 will disappear. Or if it gets below this pivot here by a couple of points, then that 2 will disappear too. Everyone okay? But until it gets above that resistance or breaks this pivot here by X number of points, it will remain a 2 because it's still a valid signal for any trader to enter. Is everyone okay with that? I hope so. There's not many questions coming in, so I'm assuming that's okay with everyone. Okay? Now, when you're trading a number 1 and 2, you're basically trying to trade from this minor support here to this major support here, which is the major pullback. So what your goal is that you're a counter trend trader where you see a trend and your goal is to sit there and play a major pullback to this level here, to the major support. So you're trying to make money from here, which is the minor support, to the major support here. Everyone understand that? And if you're an Ichimoku trader, that's basically playing from the Cajun here to the cloud. Okay? Any questions? Hopefully I didn't lose anyone. Yes, you're going to see it in the Ichimoku chart in just a moment, John. Okay? Now, if you proceed forward, actually, this is a major, let's go back here. Now, once you're at this major support, this is kind of do or die for the trend, okay? Because if it breaks this major support, this is going to this is no longer a bullish trend, and it's going to start to come down and start a trend to the downside. So this is a very, very critical support that basically is going to tell you if this is going to be a major pullback here, where its price is going to stop and then come back up to retest this high, or if it breaks this support here, this major support, it now has a possibility of entering a major trend. Okay? Now, a couple of questions. Does this occur in any time frame? Yes. You could look for these numbers in any time frames that we support, and I'll go for those in just a moment. Another question says, looks more to be a bear trade versus bullish. It is, Bob. It depends on how you're looking at this, Bob. Okay? So, remember, if this is a bullish trend here, the very first thing we're looking for are counter trend. When you're doing counter trend, Bob, that's going to be bearish. So the counter trend people are looking for bearish trades where they're trying to predict where this is going to stop here and play to a major pullback level. So those are counter trend traders where they're trying to predict where price is going to stop in a major bullish trend and play at least to a pullback level. Okay? So number 1 and 2 are basically counter trend. Okay? Now, this right here, Bob, is the most critical point right here. Okay? The reason why is when you get here, this is basically do or die for this. If it breaks the support, then you have a possibility of a major trend to go down, and you're betting on it going down. If it holds this major support, then it now has a possibility going up. Are you okay with that? Okay? So if you're a counter trend trader, you're going to be looking for a red, in this scenario since it's bullish, a red 1 or 2. If you're a trend trader, you're going to be looking at scenarios where price gets this major support, and then you're going to look for it to bounce off there and to start going back up. Are you okay with that? Yep. Okay. This right here is the cloud. Okay. This right here is going to be the bottom of the cloud, which is the Senecal B, if you know Ichimoku. This right here, the first red line here is the Cajun. So in order to start a possible major pullback, you have to break the Cajun, which is our medium-term support. Okay. Once you break that, then you're going to have a journey to the cloud. The bottom of the cloud or the top of the cloud, wherever that's the Senecal B is, that's basically the line in the sand between a major pullback or a trend reversal. Because if it breaks the yellow line, which we call the Senecal B, it now has a possibility of a major trend. Okay? Everyone okay with that? So if you break this major support here, you now have a possibility of a major trend. So what were you looking for? If you break that major support, that's a number 3. Okay? So number 3 is the first sign of an institutional wave. And number 4 is basically the animation's not working too well today. And number 4 is basically when a pullback starts to occur, the number 3 will turn into a 4. And this 4 will remain a 4 unless price gets above this major resistance here or gets a couple of points below here, it'll remain a 4. So what you should be doing is looking for number 4s, and At that point, if you're a pullback trader, you want to sit there and wait for price to get to that resistance, which is the cloud. Once it gets to that cloud, then you could enter. If you're a breakout trader, what you're going to do is look for the 4, find the pivot that occurs right there, right before the current price action, find a couple of points below it. In this scenario, bullish, it will be a couple of points above it, and put a breakout order somewhere here, and that basically will be the trend. You guys okay with that? Okay. Everyone okay with that? This does get a little confusing, but believe it or not, once you understand the chart pattern, it's very, very easy to sit there and trade this way. Once you understand the numbering system, it's going to be very, very easy for you to find very good opportunities out there, believe it or not. This is probably the hardest part that you're going to get involved, but believe it or not, this actually allows you to sit there and analyze instruments without ever looking at a chart. One of the goals that we had is that, remember, our specialty is Ichimoku. When Garcia Sada came up with Ichimoku, and Ichimoku means at one glance. The whole idea of Ichimoku is to simplify things. So what we wanted to do was create a tool set on our website where we could analyze charts without actually looking at charts. We could find opportunities without looking at charts. Because we know one thing. The more you look at a chart, the more you're going to start dreaming of things that are not there. Okay? So this actually is going to allow you to sit there, find opportunities, good opportunities, and allow you to concentrate your time and effort behind these good opportunities instead of a lot of bad apples. Think of it this way. If you pick a lot of bad apples, you're going to get frustrated to a point when a good one comes, you're not even going to be able to recognize it. And that's basically what we're trying to do, is stop traders from keep on looking at bad charts, which will take the energy away, take the efforts away, and allow them to only look at good charts and concentrate on that. And that's what this numbering system is going to allow you to do. Everyone understand that? Yes? Okay. Tom, we're not going for the breakout strategy or anything right here, but I can show you a webinar that I've done where it goes for a little more detail on the breakouts and stuff like that. Remember, we're just trying to keep it general right now so that no matter what type of trader you are, whether you have an existing system or whether you have Ichimoku, you still could use all the tools from the website. Okay? Our goals in EII Capital at Ichimokutrade is not to discriminate on what type of trader you are. Okay? Now, let's take this and just expand it and just talk about it from the Ichimoku perspective. Okay? This is more of an Ichimoku perspective here. So you have a trend here. It's going to sit there, come to the Kijinsen. The moment it breaks the Kijinsen, it's going to turn into a 1. It will remain a 1 until a pullback starts to occur. When the pullback starts to occur, it will remain a 2 until it gets above this Kijinsen by a couple of points, or it gets below that pivot by a couple of points. So it will remain a 2, giving you the ability to look for a trade setup, okay, whether it be a pullback trade or a breakout trade. Okay, so it will remain a 2 until either a pullback trade or a breakout trade occurs. And then what happens is once it starts to trend downwards, it will basically, the number 2 will go away. So if you get above this Kijinsen or price gets below this pivot by a couple of points, the 2 will go away because you missed the opportunity. Okay? There was a question about the ES Ichimoku levels. We'll go for that in a couple of minutes. Okay? Now, that's basically counter trend where you're playing, number 1 and 2 is where you're playing to a pullback level, major pullback level. Okay? If you're an Elliott wave trader, this is basically what you're doing is this is the 2 to 3 wave, the 3 to 4. So if you're trying to play the 2 to 3 wave, which is basically, you have this is 2 to 3 and this is 3 to 4. So basically the 3 to 4 is the major pullback. So if you are an Elliott wave trader trying to play the 3 to 4 wave, you're looking for a 1 to 2. Most Elliott wave traders are basically trying to trade the 4 to 5 in the ABC patterns after that. That's basically going to be a number 4 for you. Okay? Once you break this major support, which is basically the cloud here, which is the Senecal B, okay, it basically turns into a 3. It will remain a 3 until a pullback starts to occur, and then it will turn into a 4. Again, the 4 will remain a 4 until it gets a couple of points above the cloud, or it gets a couple of points below this pivot low here, and at that point, it will change to a 5, because 5 is basically means an institutional trend is starting to occur already, where all the Ichimoku rules are valid. Everyone okay with that? Bob had a question. Is the Tinkerson not used in the numbering system? No. Believe it or not, the biggest misconception a lot of people have is using Tinkerson, the Ichimoku Tinkerson indicator, which is support resistance and 9 bars, in the strategies. The Tinkerson, believe it or not, is not used for strategies. A lot of people do, I understand. But if you actually analyze it for any instrument at any time frame, you'll understand that it's more towards optimization, not for entry. And we actually use the Tinkerson more towards money management, where what we call preserve mode. When we get to a certain amount of profit, and at that point we want to protect our profit, we're going to use a Tinkerson. But it's not used in our numbering system at all. I know a lot of people like the Tinkerson cadencing cross strategy. Believe it or not, this number 2 here is indirectly the Tinkerson cadencing cross strategy, but with a higher probability. Because believe it or not, the Tinkerson cadencing cross strategy, in a consolidation pattern, you're going to get eaten up alive. If you actually resort to this number 2, which is a green light cadencing cross strategy, you actually have higher probability of success compared to a Tinkerson cadencing cross strategy. Everyone good? Now, here is a chart. Everyone see this? This is a snapshot I took of Apple, I think at 12 o'clock today. Okay? This is a weekly chart of Apple. Can everyone see this? Okay? Great. So let's begin this breakdown here. And if you look at it, do you guys see this trend? Actually, where's my mouse? Right here. We're going to begin by looking at this trend coming down here. So up to this point, I gave you purposely a bearish example because I know a lot of people can't think bearish. And now what I'm going to do is I'm going to show you how to find the bottom and start playing it to a reversal to go up. Okay? So you have a nice little trend here that's going down. Everyone see that? Okay? Which is down here. So believe it or not, on the heat map, on all our numbering system, it's going to be a red number 5 because it's basically showing you it's going down. Okay? What you're looking for is the moment price closes above the cadencing, which is this green line here that represents support resistance, so 26 bars. The numbering system goes to green number 1. Green specifies it's bullish, red specifies it's bearish. Okay? This will remain a 1 until a pivot's formed. Okay? The moment this bar right here closes, the pivot forms. The moment that bar closes, it goes to number 2. Now, you as a trader now have the ability to set up for a pullback trade or a breakout trade if you're a counter trade. If you're a pullback trader, what you're going to do is you're going to look for the flat cadencing here, and you're going to pull a pullback order here to go long. Is everyone okay with that? Yes? Okay. If you're a breakout trader, you're going to take this pivot high, a couple of points above there, you're going to put a breakout order there. Everyone okay with that? Yes? And don't worry, we'll show you some lot more examples because we actually have a blog where we blog actual trades live too, believe it or not. So I'll show you how you can sit there and look for these examples of us entering trades and so forth. Okay? The first question is, John had a question, where is the first trade? Well, John, the type of trader I am is I like to look for confirmations Reason why is there's a lot of games being played around breaking support resistances. So a number one occurs right here, which is basically at, whoops, right here. So you have a trend, and when this bar right here closes above that green line, which is the caging sin, it becomes a number one. A lot of traders, when they break support resistance, they like to enter right away. Okay? I personally don't. So my trading style is to wait for confirmation. And that's one of the reasons why we have this number two, is because of me trading this way. Okay? So for me, I like for a pullback to occur. So this thing decides to go up. I'm not willing to play this because sometimes this upward movement is big, sometimes it's small, it varies. And the reward risk is not that great. So I'm looking for it to go up, and at that point, the moment the pivot formed, which is this red bar right here, I now could sit there and put a pullback or breakout order. If I'm a pullback trader, I'm going to look for a green line, the caging sin right below me, and place a buy order here, a buy limit order here, to buy here, to go up to the top of the cloud. If I'm a breakout trader, I'm going to take this pivot, a couple of points above it, place my breakout order here, play it to the top of the cloud. Everyone okay with that? Okay? So that's how you play a number one and a number two. So a number two is going to occur when you have a pullback. Okay? So when a number two occurs, you have time to sit there and place a pullback or breakout order. It's not like you have to rush to the screen, rush to the chart to place an order. You're going to have some time, believe it or not. Okay? And that's the beauty of our signals. They work for day traders, but they also work for long-term and swing traders, even if you have a full-time job. Because when these signals come, it's not like you have to rush to your chart and place an order. You're going to have time, because if you look at it, when this bar closed, 1, 2, 3, 3 weeks later, it came down to our support level, and at that point, it entered the trade. You guys okay with that? Remember, our goal is not to chase the market. Our goal is to put orders out there and let the market meet our demands and requirements and then enter. Okay? Now, there was a question here from Francisco. I read that it's not recommended to trade in the cloud. Am I right? Well, Francisco, if you're a counter trend trader and you're going to trade the ones and twos, then you're going to be trading for the cloud, believe it or not. It's not the highest probability trade because it has a limited reward. And for you to get a 3-to-1 reward risk ratio is very hard. The only way you can is if you do pullbacks only on number twos. So to get a 3-to-1 or higher reward risk ratio, you have to take a number two and trade only pullbacks. You can't really trade breakouts. Okay? So now, this comes to the top of the cloud. The moment right here, this bar right here, closes above the cloud, it becomes a 3. Okay? When this bar closes above the cloud, it's a number 3. The moment a pullback occurs, this is a number 4. You now have the ability to place a pullback order or place a breakout. If you do a breakout, you're going to take this pivot, a couple of points above it, place a breakout order there. If you're a pullback, you're going to place a pullback order either at the yellow line or the green line. Okay? I'll show you a video which talks about these strategies in great detail that I did in Kansas City and Houston, and you can listen to those webinars, which talks about these pullback levels, what you want to look for, whether you're going to place a pullback here or there. Okay? Now, this is a weekly time frame. It doesn't mean that this only works on weekly. It could work down to a 10-minute. It could work on any time frame. Remember, we don't discriminate on time frames at all. Everything we do is our goals are always to make sure every strategy and everything we do works on any time frame and any instrument. Okay? If you don't do it that way, then you're curve fitting, and that's not a institutional way. Retail ways are curve fitting, but institutional ways are not. Our goal is to create products that pretty much can be used for any time frame and any instrument in the world. Okay? John had a question, but you got in at a 2 and went through the cloud to get out at the 3. Well, you're going to get out before it gets to a 3. The reason why is you're going to get out here, John, right there. Remember, it's hindsight that now that it actually closed above it. A lot of times it's going to get this yellow line here, which is a Seneca B, and bounce off there. So it's hindsight it actually closed here. So you're going to get out before it actually turns to 3, believe it or not. Okay? Now, let me continue on because we've got a lot to cover. Okay? Seems like we need to do an Ichimoku webinar, which we'll set up. So this right here pulled down here to the Cajunson. Now, a lot of people are saying, well, this is Cajunson right here. Remember, a moving Cajunson is not a support resistance. A flat Cajunson is more of a support resistance. That's one of the reasons why when it came down to this Cajunson, here it was moving. That's not a support. You look for the previous flat part, which is here, so that's the support right here. So that's where you're going to put a pullback trade here. Okay? And then what will happen is once this becomes a pullback, this remains a 4 until it gets X points below this green line or it gets X points above that pivot. And at that point, if it gets above that pivot here by X couple of points, this 4 is going to turn into a 5 because that's now trending. Everyone okay with that? Okay. Now, a couple of people ask me what are a couple of points, this and that. I'll show you the indicator that actually draws all that. In TradeStation, we actually have what we call Ichimoku dots, which show you the exact values, everything through dots. And I'll show you that in just a moment. Any questions on the numbering system before we move on? I hope that's clear. If not, please let us know and set up our one-to-one session because that'll make it even more clear for everyone out there. Okay? And I know there's a lot of Ichimoku questions, so please, we will get to those too. Garth asked the question, can you use it for Forex? Yes. Remember, Garth, you could use it for Forex, stocks, futures, any global market out there. Our philosophy is if you could chart it with Ichimoku, you could pretty much trade it. Okay? Any questions? Okay, so we kind of just bypassed the layout and we went to the numbering system. So let's now go to the website and kind of go through everything that's available. Okay? So everyone see the website on the screen? Yes? No? Okay, great. So very first thing, of course, you need to do is log in. Okay? So I'm going to click on login and I'm going to click and I'm going to log in as me. Okay, now this is subscription-based, which I'll show you in just a moment, but I want to kind of take you through the tour of the website before we go into anything. Now, when you log in, it's automatically going to take you to the dashboard. If you look up here, this is our menu system here. Everyone see our menu system here? Okay. Also, you have a contact us, videos, events, little shortcuts here to kind of simplify things. Also, we're on Facebook, Twitter, YouTube, and blog. Now, a lot of people find us from YouTube, that's great. Find us from Twitter and Facebook, that's great. One of the most valuable things to learn how to use this website and also learn how to use Ichimoku successfully with good reward-risk ratios, go to this blog. Okay? I'm going to go to this blog in just a moment, but you can see that we've been blogging since 2007. Okay? So it's been a very, very long time since I've been blogging trades. There's a huge history of things there. We blog trades of the week for all the global markets there. We also blog, we've been starting to blog a lot of live trades now, and I'll show you the last one, which is a Forex trade in just a moment. Okay? But here's the dashboard. So this is kind of like your home page where it has everything that you need here. About us, basically goes for our team. Also contact us. This shows you all our office locations, your email addresses, blah, 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 that you need to know to contact us. Trading tools here, if you click on these trading tools, it'll go through, give you a description of all the tools that are available out there and so forth. Now, one thing I like to show you, one of the things that we added on every one of our web pages is this navigation screen. Does everyone see that? Okay. If you have a hard time understanding still the number system, click on one of these in the navigation. It'll give you a verbal description, and believe it or not, it'll take you to a short 5 to 10 minute video typically on what those zeros and ones mean. Okay? So it gives you a verbal, it gives you a, let me try my phone. It gives you a text description along with a video too behind it, which is a short video. Okay? This is a navigation part that we've added on every web page to help simplify it and make people easier to understand the website. Okay? So I'm just clearing up some of the questions. Okay, so you have there. Next is the Education tab. If you click on Education here, if you look here, this kind of goes through our education, which is our university program, and it goes for everything in here. If you're interested in Ichimoku and learning more about Ichimoku, there's information here. If you're interested in learning about options, there's all information here. This basically is our university education program, and it goes for everything in great detail. These are not workshops, but a university program. Okay? Tom had a question, what's the name of the Japanese name for green line? It's the Kajinsen. Next is the video section. If you click on the video section, the very first thing I'll look at is not here, but over here. This right here gives you a bi-weekly videos for Forex market futures and global. If you found us on YouTube, you'll see that basically these are videos I put out every 2 weeks, and I basically go through all the Forex currencies, the main ones. I go for a lot of futures, and then I go through all the global stock markets around the world, and I go through and I analyze them on a weekly basis and bi-weekly basis, and give you a forecast on what's going on. Like a lot of you guys think that U.S. market's hot right now. It's not. It's actually Saudi Arabia. Okay, you have Saudi Arabia, you have Denmark, and so forth. So, and then you have Argentina, which is more towards North and South America. So, believe it or not, these are videos we put out bi-weekly. The video is about 30 minutes long, and there's a lot of good content in there. In fact, you could probably even see some of the things that we're positioning our trades in by listening to my words and so forth there. Okay. Then also heat map email alert videos. So when we are going to record this video, we are recording this right now. This video recording will be placed in this section here. So if you click on here, it will be placed here. You guys see that? So you'll see another video that says Tools of Ichimokutrade, and basically it'll say August webinar. So later on, when you want to go back and listen to this video again, all you do is come to this section here and you'll see it. If you want to learn more about Ichimoku, click on Ichimoku videos, and these are all our Ichimoku videos here. If you want, there was a question on how Ichimoku relates with Elliott wave, you're going to see in here. If you want to see how Ichimoku relates to Fibonacci and Gann, you could click on here. These are individual videos that we put on YouTube to discuss each individual Ichimoku indicator. Miscellaneous, if you come into miscellaneous, you could kind of see some trades that we've taken, did some videos on, where we kind of showed you how you can make 400 pips in 3 days in currencies, 20 points on futures, and so forth. And then if you're a Thinkorswim user, if you come in here, we actually have a video here how to set up Thinkorswim, because that's the most confusing part for Thinkorswim is how to set that up. So we have 2 videos here how to set up Thinkorswim. And then if you're a TradeStation subscriber, actually there's no videos here, but we are going to be putting videos here for TradeStation soon. And then if you actually click on workshop videos, and this is a place I tell a lot of people continue to keep on checking, because we are traveling around the world doing presentations on Ichimoku. Every time I travel, I do record it and I do post it. It's accountability for us, okay? So you can see the last workshops that we did, Houston here, Kansas, and so forth. So you can see real live workshops, presentations we've done, and questions and answers that we've gone through, okay? Any questions so far? Okay, great. So we've got the videos. Then if you go to resources, one here is the TradeStation information. This is something that if you're a TradeStation subscriber, believe it or not, we're putting a lot of our trading tools available in the App Store and TradeStation. We actually have our own Ichimoku indicator because of our own color codes. Everything's free. If you click on this little box, it'll take you to the App Store there, and you can install it. We also have our Ichimoku dots. Remember how I was talking about a minute ago, the buffer and so forth? Let me click on this little screen. Actually, here, if you look at the screen here, actually it's not allowing me to. If you actually enlarge it, let me enlarge it. You can't see these dots, but we actually have these green dots and blue dots. The green dots are basically a trailing stop, which is a buffer off the green line, the Kajinsen, and the blue dots are your breakout levels. So we actually have all this programmed up in TradeStation, and you can use it. There is a monthly subscription to it. This is $10. And then we also have these support resistances. There was someone mentioning how they love our support resistances that we put on Twitter. They're actually going to be coming in the TradeStation store very soon. That's going to be available. And then we also have Trader's dashboard, and then and so forth. So we got a lot of tools that are available for TradeStation out there and so on. Okay. Also, if you had the book I wrote, I remember I'm a first-time publisher, and we went with Wiley. Unfortunately, we can't control certain things. One of them was color and the charts. So one of the things we did was we made all the charts for the book available here in color. I know it's hard to do and go through, but that's available there. Okay. Now, this is a #1 place I like people to, I think you should go. This is something new that we put out this year. This is something we used to do in the institutional side a lot, but never make available to the retail side. So this is the first time we actually did that. And what we do is we put out a report now where we give you forecasting of all the instruments worldwide, from stocks to currencies to futures. We give you this one, the first quarter, which is pretty much around January, where we give you predictions for the entire year. So this was the predictions for 2014. And then what we do is in June, we update that entire report for you. So if you click on here, it'll actually bring it up. This is about 130 pages, and it goes through full-blown technical analysis with charts, everything from futures to stocks, global markets, to everything. So you could kind of see here, this updated one in June discusses what our predictions were at the beginning of the year, where we stand with them, if we change forecasting, and so forth. So you could kind of see what we're doing on the institutional side with our trades. Okay? This is great. This is something retail people need to look at and kind of see and understand, because this is really done at the institutional level where you guys really don't get to see any of this stuff. And this is the first time we're making it available, and we'll continue to keep on making it available from this point on. Okay? So that's there, the blog. Blog I'm going to show you. We got the forum, we got the wiki. These are all resources that we're going to show you. I'm going to show you the blog in just a moment because I want to kind of go through the heat map and the scanner before we go to the blog. Events, if you click on events, we have free live workshops here. Heat map, email, these are the webinars for the heat map, live events. These are going to be free and then paid too here. You can see, so we basically are presenting next week in San Francisco and then Seattle. You can see the dates, times you can register. These events are free. And then we have our Ichimoku University for options and everything worldwide, from U.S. to Singapore and to Europe. Webinars, all our webinar information here. So these are places that continuously I would keep on coming in here where you can see all the webinars we're scheduling and so forth. We don't have many posted right now, but we will be posting a lot of webinars that we're about to do very soon right upon here. And we also, our New York office will be sending out an email blast so everyone will see that too. Okay? So any questions now before we start beginning and start going through the tool sets? Okay? So the very first tool set, so you had a question, Bob? Avi had a question, are these dots different from the PSR? Yes, they are. These dots, the dots are customized for ours. It's based on Ichimoku settings, and it's also based on Ichimoku values and so forth, volatility and so forth. Noja had a question, doesn't TradeStation have Ichimoku? They do, but I like my colors a certain way, and a lot of people like it based on when I'm presenting, so they wanted that indicator there. It's free, so you could download it for free. Do you know how the indicators for TradeStation? Okay, so Bob, I'm not sure what that question is last. Okay, so let's go through. The dots are, John, are not available for the public, so sink or swim. They are privately available for our students, but they are available for our students, but not for the public. And the reason why is, unfortunately, the Thinkorswim platform is too much of an open programming environment. Can you use, Joe, you could use Ichimoku on Ninja. That's no problem, but we don't have the dots available for Ninja. Okay? So now let's go for the two products that we have. Three products that we have. So the very first one I'm going to go for is heat map. And then the second I'm going for the scanner. Now, the difference between the heat map and the scanner, the heat map is real time. Okay? The scanner is more towards end of day. Everyone okay with that? Okay, I'm going to show you advantages and disadvantages of both. Okay, so the heat map here is basically where we support all the global markets. If you come down here to this drop down here, you can see all the markets we support. So we support the Australian market, Canadian market, China market. We support in the U.S. the country ETFs. So you have India, Malaysia, Singapore. So if you're looking to trade a particular country based on my global stock video, you could come over here to these country ETFs, find the ETF that relates to that country, and trade it with stocks or options. Okay. We have currency, which is the Forex market. We have the Dow 30. We have all the ETFs out there, the double, the triple reversals, all those ETFs, they're all in here. This is the futures market where we cover commodity futures, oil, natural gas, heating oil, rice, soybeans, everything there. German market, which is the DAX market, Indian Sensex market / Nifty, Malaysian market, NASDAQ 100, sector ETF, Singapore, S&P 400, S&P 500, UK stocks, and world market. So this is all the world indexes and so forth. So these are all the markets that we support real time. Okay? And there's a lot here. Remember, our goal is diversification because we believe that the only way someone could consistently make money now is to find the trends. And that means being able to search any market out there and being able to find those trends. Okay? Everyone okay with this so far? Okay? Now, in here, this is our number system. Everyone see this? So, here's your 2s, 1, 2s, 3s, 4s, and 0 basically means nothing, and so forth. Everyone okay with that? Okay? If you look here, red means bearish. Green means bullish. Everyone okay with that? Yes? Okay? Now, one of the things we have is we have overextension levels based on Ichimoku. No one's seen these, but we have an Ichimoku way of determining things being overextended. Okay? It's a proprietary formula. And if you look, we have 3 different levels of overextension. The medium, which is here, which is basically blue, so the short term, which is the lowest. Then we have a medium, which is yellow, and an extreme overextension is gray. So what we do is we take these numbers and we change the color of them instead of them being black to show you overextension. So if you ever see a gray here, see this gray phi right here, that tells you it's trending, but it's very heavily overextended on the 30-minute. Is everyone okay with that? So the most extreme is going to be the gray. Next is going to be the yellow, and then the last one is going to be the blue right here. Everyone okay with that? And the way we teach our students is simple as this. If you're ever in a trade and you get a gray, that means get out of the trade. Okay? If you're trying to enter a trade and it's gray, don't enter it. If you're in the trade and you get a yellow overextension, that basically means go and sit there and start going to preserve mode, start using the Tinkinson as your trailing stop, which gives you a close, tighter stop. Everyone okay with that? Okay? If you get this little blue color here, that tells you you need to go down to a lower time frame to manage that trade. That's basically how we teach our students to deal with overextensions. Everyone good? So, the question you should be asking is, should you be entering any trade that's overextended? No. Okay? And you can kind of see from here what's overextended. If you're a counter trend trader and like to trade overextensions and reversals, you could sit there and search for these extreme over conditions and start looking for reversals on the lower time frame. Everyone good? Okay. Now, Stefan was saying this may be confusing because the trend signals are 2, 4, and 5, and 1s and 2 are counter trend. Oh, yeah, I see that. That needs to be changed. We'll get that changed because that needs to be changed completely. So this 2 needs to be down here. Okay, so thank you for pointing that out. We'll definitely get that changed. Okay? Everyone good with that? Now, Mahesh, we'll look at futures in a moment. I just want to go through everything here. Now, here's the best part in here. If you want to, what time frame? If you notice, these are the time frames we support: 10, 30, 60, 120, 240, daily, weekly, and monthly. These are the time frames we support. Reason why is we did a lot of research on what we call fractal wave trading, where time frames support are showing wave patterns within other wave patterns. And these are the time frames that actually do that. By trading these time frames, we increase our probability of success as traders. That's one of the reasons why we only support these time frames. I know we had a lot of requests to support 3 minutes, 5 minutes, 15, and so forth, but I'm sorry, I cannot support something that I've not done research on. And these are the ones we've done research on, and we know there's fractal relationship between these time frames. And everything we've done in between 5 and 15 minutes, we haven't seen relationships among those at all. Okay? Everyone good with that? Some people may not be, but I understand. But you guys got to understand, all these tools are first created for us, for our internal trading, and then we made it available for the public, just so our students can use it, and then also you guys can use it too. Okay? So in here, you could filter down and say, okay, you know what? I'm a 4-hour trader. If you filter that, it'll show you only the 4 hours here for all these instruments. So this is a filtering that you could choose. Everyone good with that? Remember earlier we said the highest probability trades were 4s. So you could come down in here and say, I only want to see only opportunities on 4s. And you could filter down into here. So this will show you all the opportunities on 4s for this Dow 30 market. Everyone good with that? Okay? Now I'm going to change this back to here. And here's one function a lot of people like to look. This is a Kumo breakout, pullback. Everyone see that? This is price at the Kijun-sen, price at the Tinkerson, price at the SKB, counter trend, extreme over conditions. These are all the searches here. Everyone okay with this? Yes? And the reason why we put this in here is if you remember this slide here, and we said that right here, and this is a major point right here, this red line right here, which is the cloud. That's the major pullback level. So this is going to determine whether this is going to bounce off there and go up or break it and start a trend downside. Everyone remember that? This is also the level here that elite wave traders are looking to trade, the 4 to 5 wave going up, right? So in order to find that level, what you should do is put this price filter at either price at SKB, and if you're a Fibonacci trader, that's typically the 61.8 Fibonacci, and the other one is price at the Kijun-sen, which is typically the 50% retracement. So these are the boundary level support resistances between that are here. So if you like to sit there and look for it to go the other way instead of these strategy numbers, all you have to do is look for price to be exactly at those levels. Everyone okay with that? This right here will tell you exactly when price is at these levels. Okay? Any questions? Not sure if you guys are comprehending that, but these are very, very powerful, especially this one right here. I live and die by this one, believe it or not, price at the SKB. Because that's one of the strongest support resistances in Ichimoku. Okay? Some questions I know we're going to get asked and not asked yet. Where's the Tinkerson cross strategy, the Chicago cross strategy, some of the other strategies that are laid out in the ebook? They're not here yet, but they will be here by the in about 1 more month. Everyone okay with that? If you like to search for extreme over conditions, you could do that, and you can look in here, and there's only a couple of them. Everyone okay with that? Any questions in regards to this at all? Okay? Now, one of the things is if you scroll downwards, notice here, this is when it was last updated. Everyone see that? Yes? Okay? If you sit there and you go to currencies, okay? Scroll down. This will tell you the last timestamp, date timestamp. Everyone see that? Now, if you want to get the current values, you have to refresh your browser. Everyone understand that? Yes? Our black boxes are updating the website database continuously. But remember, this is a browser. When you first pull up this page, it's going to show you the values. 10 minutes later, if you have not refreshed it, it's still going to show you the old values. So you have to sit there and refresh it. There's a question, will you get a recording? Remember, the recording will be available in the video section under the webinars. Okay, so it will be available as I showed you earlier in that location. Okay? Any questions in regards to that? Okay? Now, this is real time. Everyone understand that? Yes? And so, Jerky, there's a question. Is this for members only? Yeah. A lot of this stuff is for members only, and we'll talk about that in just a moment if you just bear with me, and we're almost there. There was a question, is the heat map values available on the Android tablet? You can sit there and look at these the website through Android, but there's not an app specifically for it. And believe it or not, there's a lot of information here, and that's very hard to squeeze in a little screen, believe it or not. As a Note 3, and that's still hard to see. Okay? Martin, Martin had a comment. Fantastic stuff, but still so many choices. How do you reduce to 1 or 2 trades per day? Well, Martin, I'm about to show you that. Okay, and I'm going to show you that from the scanner point of view, which you then can use the same methodology, same way, and use it for the heat map. Garth had a question. Where does the heat map come from? A lot of people use the word heat map, so we label it heat map. I know someone internally wants to change it, so we may change it, but it just kind of gives you, I don't know, color code of something. I don't know. It's just a term used by everyone. So let's get to the scanner, because this is being thrown out and redone completely, and it's a very, very valuable tool now. So if I click on scanner, I now have these tabs that I never had before. And one of the things you could do is you could now save profiles, okay? And then what you could do is you could have reports generated on these profiles too. Okay, Mahesh said a question, futures on heat map was missed. No, if you come back here, Mahesh, the very last thing I went to was futures. If you click on futures, here's my futures heat map. And you can see everything from soybean, corn, rough rice, platinum, gold, crude oil, sugar, soybean, wheat, lean hogs, platinum, everything is in here. Okay? Okay, so now let's go back to the scanner. So before I go for the profiles, I want to go for the general tab. Here, if you like to search for a particular symbol, you can put that symbol in here. Okay? Price, if you want to sit there and filter based on price, click on this, and this will allow you to choose the different price options. Here, whoops, here, over here, this volume, this is the 60-day average volume, where you can sit there and filter based on volume. This is the current daily volume. Here you can filter on, and here, if you can sit there and filter on stocks, currencies, and futures. Remember, the scanner is more towards the U.S. stock side. It's not really for the global stock markets yet. Okay? And then right here, this asks you what view do you want to see. Do I want to see the daily view or the weekly statistics? Everyone okay with that? Yes? Next, what do I want to see in my display information here? So if I come to column view, I now have information where I could see various Ichimoku values, I could see various option values, various other things. Right here, if you look at this, this gives you the average 20-day call volume for options. This gives you average 20-day put volume. This gives you the previous call volume the previous day. This gives you the previous put volume and the call volume today, and so forth. So this is more option related and so forth. Everyone see that? Yep. So if you're a person that's an option trader that likes to scan for unusual volume, to kind of see something that may be happening ahead of time, you can sit there and scan for unusual volume now here. So I'll show you all the option stuff in just a moment. Over here, if you deal with we also display average volatility, current volatility, high, low, and so forth. We also give you the values of the future cloud, whether it's bullish, bearish. We give you overextension. And if you're doing strategies, this will tell you if prices cross the Chicago send account A, B is crossed, and so forth. So these are related to all the strategies and tell you if the strategy is on or off at these levels, and you can sit there and display them. Okay? So I'm going to just here, for the heck of it, I'm just going to show you average volatility and current volatility. So if I click on that, whoops, and click on update, it's going to sit there and add them into my columns here. Everyone see that? Yes? Next, we're going to go to the option filter. If you deal with options, and if you're a person that likes to buy puts and calls or deals with strategies with low volatility or average, you're going to select this, and this will filter down and find you everything that has low volatility. Okay? If you're a person that likes to sell, right, remember we already gave you the disclaimers where you like to sit there and get a good premium when you're selling. You want to look for options that have high volatility so you get a good reward risk ratio, so you get a good value when you're trying to sell. Everyone okay with that? Yes? Now this is the other thing that we added, unusual put volume and everything. So this looks at the put volume today is greater than 10 times yesterday's volume, so forth. And this looks at the average for 20 days, and it looks at 10 times for that, and it looks for today being greater than that. Everyone okay with that? So you could scan for unusual put and call volumes here. Okay? Here, this right here, if you want to find things that have earnings in 3 or 4 days, you're going to select this here. So these are days to earnings, and these are estimates. Remember that. These companies do have the ability to change those earning dates and so forth. So just because you see it here and it says 3 more days to earnings doesn't mean it's going to be 3 days exactly. It may be varied. Okay? There was a question on the 60-minute heat map. What general criteria does the heat map consider to classify the color as bullish or bearish? It comes down to here. If you're trading this, these 1s and 2s were bearish, so these are going to be red. So everything in here is red. But if you're sitting there trading something like Apple here, when we start dealing with these 1s and 2s, notice they're green. The 5 here was red. So it's all based on the strategy and stuff that we went through earlier. Okay? I know we're going through jumping around, but I want to make sure every question's answered. And some people get irritated with it, but oh well. Okay, so that's your options filter. Now here's your daily filter. So your daily time frame is on. Here you could choose wherever you want to have direction up or down. So this looks at price being above the cloud or below the cloud. This right here looks for the future cloud, send account A and B to be bullish or bearish. This looks for overextensions. This looks for all the strategies that you had earlier. Everyone see that? So this is basically 1, 2, 3, 4, and 5. Okay? If you like the Tinkerton Cadenton cross, you could sit there and look for a bullish and bearish Tinkerton cross strategy here. If you like the span cross strategy that's in the ebook, or the Chicago cross strategy that's in the ebook, you could select these on or off. And then here, if you want it to be at the Cadenton, you could turn it on. If you want it to be at the Tinkerton, you could turn it on. If you want it to be at the Seneca B, you could turn it on. Everyone okay with that? So you could sit there and mix and match and turn various combinations here on or off to whatever your likings are. Everyone good? Now these same options, you also have the ability on the weekly. So you could sit there. Now what you could do is you could turn things on both daily and weekly. Let's say that you're a bearish trader and you think the market's going to go down. What I could do is I could come over here on the daily, look for everything that's below the cloud. The future cloud is bearish too. Okay? And notice when I do that, and I scroll down here, oops, I got to turn some of this stuff off. Okay. Let me do this. By the way, if you ever mess up in any of these parameters, click on Reset here, and now reset everything in here for you. Okay? So I'm going to come back here to the daily. I'm going to go for everything that's bearish over here. So this is everything that's bearish in the daily time frame that's basically below the cloud and have a bearish cloud in the daily. And you notice we display 20 items here and there's 180 pages. That's a lot of data, isn't it? Okay? Now what I could do is I could filter and say, I want the higher time frame, which is the weekly. I want it to be bearish too. So I'm going to turn it on. And I'm going to say I want it to be bearish. I want the future cloud to be bearish. Whoops. Turn on the wrong one. So now I just sat there reduced from 180 to 55. You guys see that? Now I could reduce this even more by saying, you know what? I'm going to sit there and only look at things that are above 30 and above $50, let's say. I want the average volume to be over 1 million. And now I've filtered it down. Everyone see that? Yes? Okay. Now, let's say I want to save this. I have all these things configured in my view. Okay. I can come here to the profile, and all I do is these are all my profiles that I have saved myself. Okay. I'm going to click on here and say Save Profile, and I'm going to say this is Test 1. Everyone okay with that? So you now have the ability for Test 1. So what I'm going to do is I'm going to reset the parameters, and you're going to see everything again here at the bottom. And then I'm going to click on Test 1, and it's going to pull up everything that I had set there and set, and it's going to basically pull up everything and show me my results. Everyone good? Yes? Now, here's the most powerful thing that you have not seen with anyone else. If you come over here to this Test 1, see where it says Daily Emails? Off? Click on this, and at 6 o'clock in the morning, for every profile that you have daily emails on, you're going to get an email where it automatically is going to send you an email with the scan results. So, for example, here's an email here that I received. So you could control what report you want, and here's the email. You're going to have for everything that you have saved, it's going to put in here, Ichimoku Scanner Daily Report, the name of your profile, and it's going to give you all the results with all the columns, everything that you have selected. And this will be sent out to you 6 a.m. Eastern Standard Time every morning for you. Okay? So you don't even have to sit there and spend a lot of time now. Guess what? It's going to be in your email box. This is a feature we just added 2 days ago. And believe it or not, it's the most incredible feature because I'm about to go through something with you. Everyone good? Yes? Now, here's a suggested profile. So what I've done is to simplify this even more for you and created some really, really good scans for you. Okay? So right here is all these scans. So see this, the price SR? This right here is telling you, if you load this up here, what this is going to do is it looks for everything at the weekly Cajunson, prices at the weekly Cajunson, and also prices at the daily Tinkinson. Sorry, a daily SKB. So you have a 2 time frame match on a daily and weekly where price is right at that major support or resistance. You guys understand that? So if you ever heard me speak out there and I talk about pullbacks and I talk about time frame matching, the more time frames you have that match, the higher the probability. Guess what? This right here, this profile is finding everything for you right here. This one and this one. The strong one means that the monthly is strong too with you with your daily and weekly. So this is finding all your time frame matches, and guess what? All you have to do is click on here. So it pulls up that profile, and then click on Save, and now you could call it Manesh Price at SR. Click OK. So you could take my profile, and now it's saved down here, saved up here, right here. But what you could do is take my profile and say, you know what? There's still a lot of results here. And I like to be a person that likes to trade things that are above 100. So you could take my profiles and filter it down even more and save it as your own profile. So here's this one. So I'm going to come down here and say Manesh to price SR filters. Click OK. And then come over here. Where is it? Down here. Turn on the daily emails to be on. So tomorrow morning, I'm going to get all the result values automatically sent to my email, and I can look at all that. Now here's the best part. See this price of SR? What if you're not a stock trader? What if you're a Forex trader? Come to the General tab, and you can now say, I only want to see the currencies. Or I want to only see the futures. So all these filters here can be applied for stocks, currencies, or futures. Okay? So let me go for these filters here. The option, extreme unusual put volume. This is looking for extreme put volumes where something's going on underneath the hood. Something unusual is going on. So these are stocks that you need to look at because something special is going on where some people are buying or selling options, and you need to look at these, look at the charts to see exactly what's going on. So if you look here, well, I've automatically set up the columns here where you could kind of see what the put volumes are, the call volumes, and compare them to the average 20-day put-call volume. Look at this, if you notice this. This put volume is 6,000 puts were basically bought or sold. The average over 20 days is 368. Something is going on with this stock ACM. Your charts then will sit there and tell you which way it's going. You guys see that? Over here, if you're an option trader, this tells you what the average IV is. If you're looking to buy calls and puts, you want to make sure your IV is 30 or less. If you're looking to sell, you want to make sure your IV is greater than 30. Everyone good? Yes? So these are dealing with options. Price of SR is looking for a multiple time frame match on daily and weekly. Price of SR strong is looking for a multiple time frame match, believe it or not, on 3 time frames. This daily and weekly is basically making sure that these particular instruments are above the cloud, and on the daily and weekly, and also the future cloud is above the cloud. Sorry, this is bearish. So everything's below the cloud, and also the future cloud is bearish on both the daily and weekly, and so forth. Everyone see this? As time goes on, I'm going to add more customized filters for you guys and even simplify this even more. Everyone good? Yes? I'm not sure if you're excited about this, but this has been one of our greatest excitements this week in the office. And guess what? By the time we get to our office, we already have all these scans laid out. So we quickly just look for these emails and like the things that we like, and boom, we're in them. It saves us so much time. We're not wasting our time going through any wasted instruments at all. Okay? Now, let's go through our multiple time frame emails. This is probably the most exciting product we've ever created, and it's very unique that a lot of people can't even do right now. If you think about it, most firms can sit there and look at 2 time frames, and that's about it. We have the ability to go up to 7 time frames for almost all the global markets out there. Okay? And the reason why that's powerful is that if you could find an Ichimoku strategy on multiple time frames, you now have a higher probability of success. Not only do you have a higher probability of success, but you also have a better reward-risk ratio that could come with it. Okay? Also, it also tells you that if you have a 7 time frame buy or sell, and 7 is the highest we go, if it doesn't sit there and trigger to go that way and starts to go the other way, you know everyone was thinking it was bullish or bearish. So if it starts going the other way, everyone's going to panic and start going the other way. So you literally, with these 7 time frame emails, you've got the market corner to a point. All you have to do is look to see if it breaks the support resistance and trade it that way. Okay? So I'm going to go through this multiple time frame email alerts, and then I'm going to take you to the blog where I'm going to show you a real live currency blog trade that we took for these email alerts. I'm going to take you from the email alert to the chart, show you chart analysis, and I'm going to show you the results. Everyone good? And I'm not going to give you a winning trade. I'm actually going to give you a break-even / losing trade on purpose. So you could see the worst case scenario. Everyone good? Yes? Okay. So first things first, what we need to do is we need to go set up our alerts. So I'm going to come over here, and I'm going to set up my alerts. So if you click on Manage Alerts, this is where you can come in here and configure everything for every market out there. So first thing you need to do is, let's go through and choose any of these. Let's look at the Australian market. The Australian market offers 3 time frame emails, 4 time frame, 5 time frame. So this is going to look for buying and selling on 3 time frames, 4 time frames, and 5. You click on what you want, okay? And then the frequency here is, this is how often it checks to see when those opportunities exist. If you click on it 60 minutes, every 60 minutes, it's going to try to see if there's a 3 time frame opportunity, 4 time frame, and a 5. And if there is, it's going to send you an email alert. Is everyone okay with that? Yes? Now, if you click on here, receive emails, this will physically send you an email alert. Okay? Notice a lot of mine are set to no. Reason why is, if I sit there and every 60 minutes turn everything on, I'm going to get a lot of emails, aren't I? Yes? And a lot of people are going to complain because sooner or later, if you set up for a trial, you don't know what's going on, and you set these all on, you're going to get hundreds of emails over a 2 or 3 day span where it's going to start filling up your email box. So one of the things you could do is you could sit there and say no to this, and what happens is we actually store the emails internally, and all you have to do is go to the alert inbox. So this is our own inbox here, so you could automatically see all those emails, and you don't have to physically get in your email box. Everyone good? Yep, Bob, that's why we added that. Okay? So notice everything on mine is set to no. The reason why is I don't want my email, my personal email flooded. I'd rather just come to the website, come over to the alert box, and find everything that's going on, and we're going to show you what that is in just a moment. Everyone okay with that? Yes? Okay? Now, if you scroll down, you notice we have this for every market that you saw in the heat map. So literally, you could come down in here, you could change them, some are 60, some are dailies, and so forth. Okay? Now, if you want 2 time frame opportunities, everything 2 time frame above, you could click this on. Everyone see that? Okay? So if you don't want the highest probability trades, you just want any opportunities that are 2 time frames at least, turn this on. Everyone good with that? Yes, no, maybe? No? Okay. Now, this one I think is the most valuable thing out there, but a lot of people don't even realize we have this at all. And it's pretty shame. Okay? And I'm going to show you what this is in just a moment. So let me bring across my other browser. So notice these are news alerts. Okay? How many of you guys get caught in trades and all of a sudden a news announcement comes and you didn't even know about it and you lost? It doesn't matter what product you're trading around the world. It doesn't matter stocks, currencies, futures. It doesn't matter. Because all these news announcements can influence you, right? This is the most powerful thing here. What you could do is you could turn these on. We have them categorized by high alerts, medium, and low. And what will happen is 1 hour before the news announcement, it will sit there and send you an email and say, hey, this is about to come out. So let me send you one I just got. So if I scroll down in here, and everyone see this? This was at 6:50 today. This basically was a medium alert, and it told me in Japan there's an event that's coming on. It's medium priority. It gives you a forecast, previous, all this stuff. Now, some of you guys may know fundamentals. Some of you may not. Some of you may care for it. It doesn't matter. If you don't care for it, at least look at it because it can sit there and influence your trades, can't it? Whether you're a stock trader, future trader, or something, you want to sit there and at least make sure that you're not getting caught into this news announcement. So you could turn this on and off at will, and you could get these emails, and they'll tell you 1 hour before the announcement. Everyone good? Notice I have my mediums and high set up. I really didn't care for low. That's my personal preference. Where a lot of people in our office that basically want everything on, and especially day traders, they want to know ahead of time what's going on and start preparing. Some people actually like to trade the news. If you like to trade the news, guess what? You're going to get an email before so you can start setting up to trade the news. Okay? Any questions? Okay, so now let's go to the emails. So I'm going to go to my alert box. And over here, this is all those emails that I turned on. Now, if I just want to see currencies, I could just come in here and just say currency. If I want to see only 7 time frame opportunities, the highest probability opportunities, I'm going to click on 7 time frames. You notice the last 7 time frame opportunity I had was August 6th for the currency market. They click on it, it actually shows me the email. Everyone see that? Yes? Okay. Now, let's go for one of these emails. Okay. So over here, remember we support the 10-minute, 30-minute, and so forth? And let me choose a different one on purpose. Actually, let's go for this one, which was 6 minutes ago. So there's a couple of things in here. Everyone see this email? Yes? Okay. Notice this gives you the title. All you do is click on it, unclick it, expand it, unexpand it. Pretty simple, isn't it? Okay. Here it'll tell you the timestamp here for the email, and then it tells you these time frames. Now, it says this is a 4 time frame opportunity. Everyone see that? Now, if you look here, let's look at this currency. Whether you trade currencies or not, just listen to it because it works for all the other instruments the same way. Do you see this instrument U.S. Czechoslovakian in 4 boxes or 3? 3. Now, that right there, no, how do you get 6? It's not in 6, Martin. It's in a 10-minute row, 30-minute row, and a 120-minute row. So it's 3. Okay, good. I'm about to say, am I seeing something? Okay, so it's 3. So the biggest confusion for people is they say, wait a minute, I see this in 3 boxes, but this email says it's a 4 time frame buy or sell. What's going on? Is there a mistake? It's not a mistake. Okay? This is the uniqueness that we have. Our whole philosophy of trading is that we do not sit there and trade anything unless the higher time frame has a strategy too. Does that make sense? So if I'm trading a 10-minute chart, I don't care if it has a setup on a 10-minute. The only way I could sit there and take a setup on a 10-minute is if my higher time frame of the 10-minute also has a strategy on it too. And the reason why is it allows price to sit there and move so I can at least try to get a 2 or 3 trade or so forth and get a good reward risk ratio. Does everyone understand that? So I'm not willing to take any opportunities unless there's at least 2 time frames opportunities. I got to have a strategy on my trading time frame and also a strategy on my higher, so I have an open path to have a good reward risk ratio. Are you guys okay with that? Yes? So when I see something in a 10-minute, okay, this tells me there's a strategy in the 10-minute and there's also a strategy in the higher time frame. Everyone okay with that? Now, the problem is I don't give you the higher time frame. I don't tell you what the higher time frame for the 120 is, and I don't illustrate it. That's why you're confused. Before, we used to illustrate both the trading and the higher, but then people got confused and they started taking trades on the higher time frame. And that was a no-no, because what happens if you take a trade on the higher time frame and its higher time frame doesn't have a strategy, you're going to sit there, it'll go up a little and then go down and reverse, and before you know it, you're taking a big hit. So we purposely removed the higher time frame and only show you the trading time frame. Does that make sense? We're not going to allow you to shoot yourself in the foot, basically is what we're saying. Okay? So this 10-minute has a higher time frame strategy, which we're not showing you. The 30-minute has a higher time frame strategy we're not showing you, and the 120 has a higher time frame strategy, which we're not showing you. Everyone okay with that? Yes? So you may think that basically this is only 3. It's not. We have our internal calculation that automatically looks, and believe it or not, there's another time frame in here that has a higher strategy. And I could tell you this now. The higher time frame for the 120 is the daily. So the other strategy that's there is the daily. So the daily time frame has the Ichimoku strategy on it too, but the whole reason why the U.S. checks is not in the daily time frame is because the weekly does not have a strategy on it. Does that make sense? The higher time frame for the 120 is daily. Agreed? So you have a strategy on a 10-minute, 30-minute, 120, and daily. That's 4 time frames you have an Ichimoku strategy. The whole reason why U.S. check is not in the daily is because the weekly does not have a strategy on there. So that's why we do not want you even thinking about trading the daily. Everyone good with that? Paul had a question with the high time frame for the 10-minute. We look at the 120. Yes, Paul. Any questions on that? Now, if you look at the parentheses here, this tells you the strategy. So this is a 4, which is basically a cloud breakout and a pullback. This is basically a green line cross and a pullback. Our email alerts only look for 2 4s and 5s. It never looks at 1s and 2 3s. Reason why is we do not believe on taking a signal unless we have some type of confirmation. Everyone good? Yes? No? Maybe? Okay. Any questions so far? Now, I'm going to take you to a real life example and walk you through it. Okay? So first place I'm going to go is, let's assume I'm stupid and I don't know how to use these email alerts and how to sit there, understand them, and then how to translate them to a chart, and then to translate them to order. Everyone okay with that? Okay? So what I'm going to do is I'm going to step you through the entire process that we do. Is that okay with everyone? Okay? Now, watch. I'm going to click on the blog, and it's going to take me to my blog. Everyone good with that? Yes? So if you look, scroll down, actually, hold on. Okay? So I'm going to take you to the blog. Everyone good? If you scroll down here, you actually see archives of dating back of trades all the way back to 2007. Yes? So you could see exactly what I mean all the way back to 2007, can't you? Yeah? Wow. Isn't that pretty interesting? So you could kind of see the progress of Ichimoku and how I learned it and so forth by tracking it, couldn't you? So let's look at this email alert. This is a live trade before it actually occurred that we blogged it. So on August 12th at 9:26 a.m. Eastern Standard Time, about 3 minutes before the U.S. stock market opened, I got email alert from New Zealand yen to go short. This is a 6 time frame sell. Everyone okay with that? Yes? Okay. Now, if I come back, so this is the email there. Now, I'm going to look at the chart. And notice what I said here. The monthly time frame is bullish and almost at a minor support. This is telling me to go bearish. But of course, I'm going to sit there and look at things. This telling me the monthly chart is bullish, so it's opposite of this, and we're almost at a support. As a result, we're going to put a pullback trade on a 60-minute to keep our risk low. Is everyone okay with that? If all my higher time frames were telling me bearish, then I could sit there and still take a trade on a higher time frame and be okay. But since I was trying to go opposite of my higher time frame, I want to keep my risk low. So I'm going to trade the lowest time frame I can, agreed, which is a cloud breakout strategy, which is a 4, and do a pullback trade to keep my risk low. Everyone okay with that? My trading plan dictates me to do that. Okay? So now I'm going to look at the chart here. So here is my chart here. This is a live chart. Everyone see that when I got the email alert? Yes? So I'm going to go short. So what I'm going to do is I could do a pullback to go short either at this green line or yellow line. I chose the yellow line here because that's a stronger resistance. So my entry was here, 86.25. My risk is this red line here, which is basically the buffer off the green line, which puts my stop there. That includes the spread. Yes? And then my preserve mode is this blue line here. Now, a lot of people ask me, what is my preserve mode? Well, preserve mode is basically once I get to a certain profit, or get to, in this case, a major support, I want to start protecting my profits. It doesn't mean I exit the trade. What it means is I'm going to tighten up my stop even more. Everyone okay with that? So when I first enter the trade, my stop is always going to sit there, be this green line plus a buffer. So whenever that green line moves, my stop is going to move. When I get to this preserve mode, I'm no longer going to use the green line, which is the Cajunson. I'm going to use the Tinkinson, which is a tighter stop with a buffer as my trailing stop. Everyone good? Yes? So is everyone okay with this trade? You can see from here to here, that was 8 points. From here to here, that's 37. So if you look at that, that's a good reward-risk ratio, isn't it? Yes? No? Okay. Now, if you look on it, the next day, I blogged, and I showed you a chart. And here's what happened. So this is my original entry. Everyone see this chart right here? Yes? Everyone see that? Okay. Notice it kind of went around. Remember, my stop is basically that red line. Okay. Once it starts moving down, I'm going to use these green dots. On this bar right here, my green dot's here. Everyone see that? Yes? So my stop basically moved to my break even, which is my entry. And what happened, this decided not to go down from this point. It decided to what? Reverse. So we exit the trade right at break even. Everyone see that? Yes? No? Maybe? So we got out at break even. Even if we lost, it's okay. Do you know why it's okay? Well, it's a failed trade. But remember one thing. This is a 6 time frame sell. If you look at the email alert, right here, you look here, the day traders were thinking bearish. The swing traders were thinking bearish. And everyone is bearish except the long-term traders. And the daily was too, a little, right? So everyone's thinking bearish. If this goes up a little, what's going to start happening? The traders that were short are going to get out, and before you know it, this thing's going to go which way? Up. So if you look at it now, give me one sec. And let's look here. Look what happened. It took off, didn't it? Yes? This is the key thing I keep on trying to emphasize to people, which people don't understand. You got this market cornered. All you have to do is see if it breaks the support resistance. Set up for a trade to go that way, to go bearish. But if it sits there and goes the other way, set up for a trade to go which way? The opposite way. If you have a 7 time frame buy, and if it breaks the support, which way is it going to go? Short. But since everyone was thinking bullish, it's going to go short very fast to a point. It's going to be a nice long trend, isn't it? So just because you have a buy or sell, don't think one way. Think the other way too. Does that make sense? So if you sit there and enter this trade here, what you should do is, if you were doing a breakout trade, put an alert on the other side. If you're betting on it going bearish, put an alert to be bullish. So if it goes the other way, and you know, and at that point you can set up to go which way? Bullish. Does that make sense to everyone? This is, a lot of people don't think about it. And here's a statistic for you. 90% of these multiple, especially the high 7 time frame emails, never go the direction that it's telling you. They go what? The other way. So what I do is I set up for a trade to go that way, and I put an alert the other way. So I got it cornered. So if the 7 time frame email alert does trigger, then boom, I'm in it. If it goes the other way, it might get alert triggers, and now I set up for a trade to go the other way. So these are opportunities for me. I'm not thinking one-sided. You guys understand that? And actually, if you come in here to the blog, and you scroll down and you look for some trades, believe it or not, there's actually some trades where I show you I went opposite of the signals. If you continue to look at these blogs and all these blogs that we've done, you'll see that I go opposite of these trades. We also have trades of the week. Here's a Canada stock market. Let me shrink this down. We have various markets here from India, Australia, everything in here. And if you futures, stocks, you name it in here. Look at gold. Everyone see gold right here? Here's a multiple time frame email alert that will set out to short gold on July 30th at 6 a.m. Eastern Standard Time. If you look at the chart, this is where it looks. Everyone see this? Yes? And if you look, this red arrow here shows you when that email alert came out, right there. All you have to do is set up a short to go where? Right here. So you sat there, you shorted it, and you traded it down. Here, you go to preserve mode, so you use this red line as a trailing stop, and you would have got out right down here. Look at the reward risk. My risk is this much right here, and if you zoom in, my risk is 1.74 points. You guys see that? Between here and here, there's my risk. To this value down here, that was 11 points. This is an 11-to-1 reward risk ratio by trading the way we do. And the whole reason why this is triggered here is because you have, in here, you have the day traders thinking one way. Whoops, not the right one. Sorry, that's Expedia. Where'd it go? Right here. You have the day traders thinking short, the swing traders thinking short, and the long traders thinking short. So when this thing decided to go, it decided to go what? Fast, didn't it? Look at that move right here. That's exactly what you're looking for. You don't want a move that's going to sit there and contemplate. You want it to start going, don't you? So, does everyone understand exactly where we stand now with all the tools? Yes? Does everyone understand how to use them? To simplify life for you guys, you want to look for the highest probability trade. So, one, I will continuously sit there, look at this alert box, and look for 7 time frame emails, 6 time frames, 5s, and 4s. Are you okay with that? So let's make a little list. Priority of things for traders. So number one thing is email alerts. Check for 7, 6, 5, 4 time frame email alerts. Agreed? Do not forget to analyze the higher time frames to filter out the good ones and the bad ones. Okay? 2, set up the scanner to produce good reports. Everyone good with that? Yes? 3, use heat map, which is real time, and find opportunities that are forced. Everyone good? You take these 3 steps, you'll find consistency. Everyone understand that? Because guess what? These are the 3 steps that we do. In fact, when I'm sitting there traveling, going to speaking engagements, believe it or not, I don't even have time. Well, we just have the reports now, so I haven't even had a chance to test that. I don't have time to look at the heat map. I solely rely on these email alerts. When we're going out on speaking engagements, we get home late at night in the hotel. I get to the hotel. First thing I do is go for these. As soon as I see these, I go to a chart, look at it, put a trade out, and move on. And that's it. You could sit there and make money and taking a flight to another country, believe it or not, by doing this. And actually, if you actually look at the blog, you can actually see me blogging it. Like there was one trade I sat there and blogged with. I was going from Atlanta to LA and LA to Sydney. I sat there, got to the airport, a 4.5-hour layover in LA. Got the email alert, sat there, put a trade on a currency trade. Sat there, got on the flight, got to the other side in Sydney. Basically, it was profitable on it. Any questions? Now, last thing I'm going to go through is the subscriptions to clarify things for you. Okay? Here are the subscriptions and the packages here. If you look at it, if you select one market, and I'll talk about that in just a moment, it's $60 a month. If you select all the markets, it's $120. Okay? If you're a currency trader only, this is the package you're looking for. If you're a futures trader only, you're going to select this. If you're a stock market trader, you're going to select this. Notice in here, if you're in the international markets, you could choose one international market in the U.S. stocks. You guys see that? So if you're a stock trader, you could sit there and choose one international and the U.S. stocks. If you need 2 or 3 different stock markets, then you have to go to the everything package. So we dumbed it down and kept it simple like this. Everyone see that? If you click on subscribe and actually come in here, if you actually sign up for a year subscription, you actually get a 70% discount. Everyone see that? Yes? Okay. If you're a TradeStation subscriber, okay, that we do have a program with TradeStation where if you're a TradeStation subscriber and you open up an account with them, even if you have existing, you could open up another account with them. You could actually get this for free because they'll pay for it in commission rebates back to you. Everything good? There was a question. I want futures in the international stock market. So Tom, that would be the pro package. If there's any mixing or anything, it pretty much goes to the everything package. Okay. I hope you guys found this very useful. And hopefully it clears up one, what signals, the signal numbering system, to all the tools and how to use them, from the heat map to the scanners and so forth. Okay. Tom, you had a question, how do I track the rebate from TradeStation? Tom, email us and we could put you in touch with a TradeStation person and he could sit there and fill you in on everything there. Okay. Remember, what we'll do is we'll sit there and refer you to the TradeStation person, which then could give you the details of everything. Remember, we don't, it's just a rebate program they have set up with us and so forth. So we're going to answer a couple of questions. Are SEC fees included? John, I'm assuming that you're talking about with TradeStation. That's something you have to include with TradeStation. We don't have SEC fees with us. Bob, again, which we had this webinar before. Bob, you can sit there and email us for the trial, and we could take care of that. Can I go month to month, cancel? Yes. Garth had a question, can you go month to month and cancel anytime? Yes, you can. Now, I want to talk about that. So, you guys could go month to month and you could do cancel anytime. Remember one thing. If the markets are not trending, are you going to get many opportunities? No. Nope. If the markets are not trending and you get these multiple time frame email alerts, are they going to sit there and break out? No. So understand one thing, and this is something, you know, I get a lot of emails and calls from subscribers. Well, you know what? Your email signals don't work because I really didn't get any good opportunities. Well, guess what? If the market's not trending, you're not going to get opportunities, especially if you're sitting there trading one product. A lot of people just trade the E-mini S&P 500 futures and one other product. Well, you're not going to get many opportunities if it's not trending. So remember, this is just, these signals are based on what the markets are doing. So if the markets are not doing anything, you're not going to get a lot of good signals. So understand that, okay? That's one reason why you should be diversified, so you can sit there and trade anything globally, and this will find everything for you. A perfect example is if you look at the Forex market the last 2 months, you know, the volatility has come out to a point it's not moving that much. Daily movement before was 100 pips or more. Now you're down to 40, 50 pips, except for this week, right? Futures have been great for the last 2 months. Stock markets in certain stock sectors have been great. The other sectors are being consolidated. So the best markets, believe it or not, for the summer have been futures. Okay. There was a question we had on the ebook. Can you try, if you come here to Trading Tools, I think it's under Trading Tools, and you scroll down right here, or any actually a lot of the pages have this. You scroll down, you click here, it says free Ichimoku ebook. If you click on that, you can download the ebook there. Remember, if you guys have questions, if you're still confused or so forth, please email us or give us a call and set up a 30-minute private one-on-one session, and we can help you through everything and kind of discuss the tools specifically to your trader's needs. You'll have direct access to our mentors, believe it or not. Paul had a question. Do you have more information about Bootcamp University and pricing? Paul, drop us an email, and then we could give you a call. We actually like to interview people for the university program to kind of see what your needs are and everything to make sure we are a fit for you. Remember, our university programs are not courses, where basically that's the end of it. Our university programs is taking you from where you're at now, reprogramming you, and getting you to a point you're consistently profitable. That means we go through, minimum you're going to be in a program in 6 months. We have students with us for over 5 years plus now. Okay, so you're continuously with us for a very long time. We go through, not just Ichimoku, but we teach you how to trade. So we go for money management, psychology of trading, and so forth. When will this presentation be available to better understand? Board, it'll be available tomorrow. It's 11 o'clock here at night for me, so after this I'm going to bed. James had a question. What's the minimum volatility represents as an active market, you can say? When you say minimum volatility, are you talking about the market or the individual stocks? Trends? Well, I mean, James, it's kind of like a loaded question. If you're looking at the U.S. stock markets, you're to look at volatility, you're going to look at pretty much the VIX product, right? If you look at individual stocks, you're going to look at the individual volatility of them and compare them to the average to determine if they're cheap or expensive, right? If you look, so that's the best way to look at it. If you look at currencies, you just got to look at the currencies and kind of see how they've been trading. If you look at a trend, you could kind of see on a daily basis how often those bars move. Or you could even actually look at the average true range indicator, and it could kind of tell you how much they're supposed to move in like 30 days and so forth, and it gives you an idea. Does that make sense, James? We do have boot camps. There's a question from Matthew. Do we have boot camps in Australia? Yes, if we could put you in contact with our agent out in Australia. We have boot camps around the world now. So we have boot camps basically in the U.S. We typically have them here in Atlanta, where we have our full-blown trading office. We also have a class typically in New York, which is our other office location in the U.S. And then we have one on the West Coast, which can range anywhere from Portland, LA, or Seattle. And then we have one in UK for Europe. And then we also have a boot camp in Singapore, in Australia, and also typically sometimes in India. Okay. Tom, we typically been doing, we did a class one time in Singapore, in Kuching, in Malaysia. But we found out Singapore is pretty much better. You could talk to us about making arrangements to Singapore, which is just a short flight from Malaysia. But our agent is actually out in Kuching. Just send us an email and we'll direct you to the correct person. Sydney, yes, Sydney is available, Matthew. Just send us an email and we'll put you in touch with the person in Sydney. If you guys are interested in the boot camp, remember one thing. The biggest difference between us and everyone else is that, you know, for us, it's not just teaching you Ichimoku, it's teaching you how to become a successful, consistent trader. Behind everything is I do the 2-day live class, we have pre-workshops, 2-day live class, and then we have mentoring. The mentoring is actually minimum, notice I said the word minimum, 2 months, which is weekly mentoring for 2 months minimum. And then what happens is that we actually have a Skype chat room, which is our day trading room, and that's where all our students around the world are, and that's where we're trading, including myself.